Hi, and welcome to the weekly kickoff brought to you by themortgagewheel.com for the week of July 17th. Not too much news is going to come out as far as economic data this week. It's really relying on what's going on with the bond auctions. You know, what we've really been seeing over the last month and a half is the pressure of all the bond auctions, what they call the bond rollovers. What this means to homeowners is every time they have a bond auction, whether it be 3, 5, 7, 30-year, 10-year, anything to do with bonds, there is a gap in the amounts being purchased, and what that causes is the yields to spike all of a sudden. So when yields go up, then obviously interest rates go up. So what we've been seeing is not a lot of appetite from both foreign investors and locals in the bonds. However, last Wednesday and Thursday we did get a big sigh of relief when the 30-year bond auctions came up, and there was quite a few investors there. So we actually saw last Thursday and Friday peaking to some of the best rates that we've seen in over a month and a half since about the Memorial Day weekend. So really what we're seeing right now is the pressures coming up to what they call a ceiling. And this ceiling of resistance is where the interest rates are really bouncing off of. Every time we've hit in about the 4.875 to almost the 4.75 barrier, that ceiling as far as interest rates, think of it the reverse, not so much the high, but the low, that ceiling or the floor has bounced back, and we've slowly seen interest rates trigger worse. Starting this week, we're closing on Monday with interest rates a little worse. Now, there's not a lot of bond rollers happening this week, but all eyes are really focused on what's happening with corporate earnings. And when we talk about corporate earnings specifically, it's really looking for indicators whether the economy is slowly recovering, if there's signs of recovery, if there's a sign of a bottom. There's a lot of concern and speculation coming up with what's going to really happen with the GDP. Of course, they watch and they really carefully monitor the GDP to show if the end of the recession is coming near. So keep thinking that 2 positive quarters of a GDP and the recession should be over. Why they were speculating the end of summer possibly being the end of the recession. So if the GDP doesn't come out as strong, that could question really if this so-called forecast of the end of the recession is really here. Now, boiling down to the home front, we're seeing what's really inspiring as far as the local real estate market. For first-time home buyers, you're starting to hear about the bidding wars. We hit this a couple times in the beginning of May. And what's interesting about the bidding wars, we're not talking about bidding wars of what we used to see 2-3 years ago before the market imploded. It's the bidding war of a house comes on the market at, let's say, $300,000. First offer comes in at $280,000. Then the second offer comes in at $290,000. Third offer comes in right at full price. So that's very interesting. So the first-time home buyer market is definitely competitive, which is healthy for the market. We're just in hopes that that slowly trickles up to what's now called the buy-ups. You have the first-time home buyers of 3 to 5 years ago now starting to consider their buying power stretched further, interest rates are low, so they're now looking at selling, unfortunately, in a low market, but also buying up at the opportunity to seize that higher price range now at that lower price level. So you have your buy-ups are really starting to come into the marketplace. Last piece, the $8,000 tax stimulus is still on the table. Again, we did quite a bit of research. We actually checked with the Department of Financial Institutions in Washington. We checked with FHA in California, where the headquarters are for the West Coast, and we also checked with HUD. We also went as far as checking with the IRS. A lot of local lenders and realtors are starting to say that they can get the $8,000 credited at closing. We checked into this extensively, and we cannot find any signs of it. In fact, when I actually called and checked in with the IRS, they laughed. And what their exact quote was, is there a possibility when you've ever received a tax refund, when you filed for your taxes, that we told you when that refund would hit? My answer was no. So his comment right back was, how do you even see that even possible that we're going to time a closing on a house within a 30-day period to get them a tax refund back based on us going back, looking at their 2008 taxes, getting the amendment filed, and closing that within 30 to 45 days? And I kind of smiled and laughed to myself, and he said, I heard you chuckle. That's our exact answer back. So as of right now, we still have not seen any proof that this is a formidable system that's in place. Other states that you see where the $8,000 tax credit is actually being credited at the table is actually states that have a loan program set up. So that means that state has a program where it comes in, they actually give you the loan in advance, and should that loan of the tax credit that you're receiving not show up, they then slap a second mortgage in its place onto your home. That's still, as of right now, according to the Department of Financial Institutions and FHA here locally, have not been set up. We will continue to check on this, but as of right now, that's what we've at least researched. Thank you again for staying in tune. Again, this week's pretty quiet on the economic data that's coming out. Bond roller is really quiet. However, it's all going to be coming out. Even with the banks announcing their earnings, how are the banks shaping up? What's happening in the economy? Looking for signs of economic recovery. That's really going to trigger interest rates more. And unfortunately, anything that shows a positive sign for economic recovery that Wall Street obviously benefits from, that comes right now at the detriment and the sell-off of bonds. And within those bonds, the mortgage-backed securities, we're usually losing ground. So that means yields go up on mortgage-backed securities, then also interest rates slowly trickle up. So that's kind of the pattern that we're predicting. However, it all depends on how Wall Street reacts to the earnings of the third quarter, or excuse me, the second quarter. So we'll definitely keep you in touch and stay tuned for next weekly forecast.